Hey everybody, welcome to the Briar Group's monthly market report. It is February 3rd. I'm Jane Johnston and I'm here with
Sean Provencher. Let's get into it, Jane.
Okay, what's your theory about what's happening in real estate in Victoria?
In general, I found that this stats package released by the Victoria Real Estate Board, by no fault of their own on the January numbers, read in a very misleading way. I think that it's painting a much more grim picture than we are. I'm not saying that the market's simple to navigate right now, but I found that just the way that the stats landed doesn't really reflect what the experience is for buyers who are shopping today. That's my
What
big
is
thing.
it that buyers are feeling who are shopping today?
Out there, the majority of instances are a lot more competitive against other buyers than you would assume having read the report. They make it, we're sitting on the edge of a buyer's market. Absolutely true. People read that and they think that they're going to be able to kind of like walk in and really have their way in negotiations. Sometimes that's the case. I think with like really high end luxury properties and for a lot of the condo market, that's often going to be true. But a lot of the more common instances, it's busy out there. There's a lot of buyers who are bumping into each other. We're seeing a lot of multiples. So that was one thing that stood out. What do you think?
I was actually really surprised by average selling prices. I think maybe that might be influenced by higher end listing selling. Same thing for condos. I was surprised the numbers went up again. Row townhouses looked pretty steady. So I was expecting average price to be slightly low, but what I'm hearing from people on the road and what I'm experiencing myself is that there are, as you said, multiple offers happening. We wrote an offer on a property this week, and after we submitted the offer, two or three more offers were received. So I just want to say that I think my lesson to buyers is if you like the property, write the offer. And to sellers, be very careful about your pricing because you want to generate that interest early on rather than waiting. Negotiating and down is a bad strategy right now.
Okay, and this is where I have some just concerns with people who only get the actual stats package or like the narrative release from the real estate board because this is not the picture that they're painting. So first of all, I had the exact same situation. List price just over $1 million, single family detached home listed. We were in, I think we were probably the first or second person in the door. We were in within 4 hours of it being placed on the MLS system. We wrote an offer within 6 or 7 hours of it being on MLS. And it was a family dealing with the property. So they needed 24 hours. We had 3 other offers and almost a fourth arrived before we were done negotiating. We won the deal, but it's not, that doesn't sound like a buyer's market. And then the other thing is if you read the front page of the report, they don't talk about average price. So average price is up. If you look at the blindingly small fine print on page 2 or throughout the rest of the report. But what they talk about is the HPI. And the HPI, for those of you that aren't familiar with that, they came up with an imaginary home for every neighborhood in Victoria back in 2005. And that imaginary home is supposed to represent the average home in that area. And they've been tracking the growth of average homes ever since using magic. It's like really, really, really complicated stuff that they do. And
An
it's a
ideal home.
useful, it's massive calculations that they use to the models they use for this stuff is really complicated. It's a useful tool. But it's all that they talk about with the press and all of their releases is the main thing. And the HPI showed that single family detached went down 2.5% and condos went down 1.5. So there's this massive spread. And to me, it's hard for a lot of people to grapple with if they don't study this stuff.
Yeah, because specifically, average price went up to just under 1.35, and then we're about where we were all of last summer. So we're even slightly above. We did have a down month in November and December for average price for single family homes, but condos have gone up. We're around 650 now. We're getting up. I will say though,
Hold
when
on,
I'm
though,
looking at
just quickly to give the contrast, though, the percentage points over on the year over year average price went up 4.7% year over year on single family, and condos went up 6.7%. There's a big disparity between that and 2.5 and 1.5 in the negative. Anyways, I'm sorry I jumped on you though.
That's okay. I'm used to it.
Yeah, I know.
Um, I will say what this. So when I'm looking at the total new MLS listings coming up, what I'm seeing is we had almost 1,200 listings come up in January, and so what that says to me is just that people are ready to get moving. Last year we had a bit of an anomaly because we had a lot of excitement from, I would say, November of 2024 to January, mid January, early February, and the market was hot, and then it just died. And now what we're seeing is people getting used to, okay, let's get our house up on the market early. And we just didn't have the match in sales like we did last year. Last year we were over 400. This year we're like in the high twos.
And
So
this is one thing in the narrative I felt they did a really good job on the report was they did point this out because they kind of took a roundabout way. They didn't talk about, like Trump was inaugurated on January 20th. There was immediate ruffling of political feathers that took place, and like that our market adjusted because of that in February, March, and beyond. But in the report they do a good job of kind of saying like, hey, this is actually a normal January. So if you look at the numbers, we're down on sales almost 20% from last year, but that's
we're
because
normal.
last year was different, not this year. This year is a normal January. They said this is right in line with 2023, 2024. Like this is what our market should be doing in January. So I like that. I think that it just kind of reinforces like we're probably teed up for a year of regular seasonality. To me, I've felt busy. We felt busy, and I talked to agents, and they all seem like they're got their feet spinning underneath them, which is usually a good sign this time of year that we're going to have activity in the market.
Agreed. And I think it also depends where you're looking. So I think we've mentioned this before is that activity can be very market specific and area specific. So micro markets around the city. So for instance, Royal Bay, we have a listing there right now. We're maybe one of three homes for sale. There isn't a lot of choice. So we're getting excellent viewings in terms of open houses and people wanting to see the place. But, you know, and even actually most of our listings are getting a lot of showing. So I think there's a lot of activity. I think we have a lot of pent up demand. I feel that buyers right now are waiting. So we have like this, you have to list and then sell, and then you have to buy. So I think we're getting a lot of the beginning of the market happening. There's choice. Buyers are excited, but they're also those who don't have to wait to offer. I think they're getting some good deals out there right now. I think like if you have a buyer who is ready and willing to go, if they see a place and they jump on it quickly, they're not going to go into multiples. But if they wait a little bit, I think that the longer a house is on the market, we're going to see more and more multiple offers coming in the spring. I think there's optimism in the air.
Yeah.
We're in a weird market too. Like I think we're an anomaly compared to the rest of Canada. Cuz like Toronto has not been doing well, Vancouver's not been doing well, but I feel Victoria has been pretty steady.
So you said terribly and using some funny language. Like Toronto's down like 40% from their peak. Vancouver's down like 20. And I was looking at this for something else the other day, and I was looking at take the average price, but not for 1 month, but for the entirety of a year. Okay.
Yeah.
And I was looking at it year by year to see what our high water mark was. And it was 2023, and we hit 1.33 ish. So 1,330,000 for a single family detached home. Great. And then we dropped down to 1.27, and we finished 2025 about in the middle at just about at 1.3 million flat. Okay, so we fell about 5%. We've come about halfway back up. Now, last month you were saying that it was a little bit higher, but if we just take, you got to count for the whole year because there's going to be high and low months, and that's a nice big sample size. So there's a fair chance that we'll get a good bit closer back to where our high water mark was, but we only ever fell 5%. That's remarkable if you think about the fact that we are one of the higher price point markets in Canada. And the other ones, that's the other standout markets in Canada, are Toronto and Vancouver. And they have suffered, on the low end, 4 or 5x what we saw in the adjustment after they raised interest rates.
I mean, I'm looking at average and median price, and we definitely had a jump up in 2020 from 8.25. A median price and average was 9.50 in January, and we ended the year in December 1.127 median price and 1.246 in average price. So we are, and
Reasonable.
we have been fairly steady over the past 4 years. That's what I'm saying. We've gone up and down a bit, but we've been fairly steady, and this year has been a good year. Those numbers are looking very steady. So that's, I think, the active buyer right now will, if they get in and they get in quick, they can get in without the competition. But if they wait, I think it's going to be a good spring.
It'll be interesting. We're gonna have this kind of like throttling balance that we're gonna watch, because like we are sitting on a mountain of inventory. The majority of the inventory that we're sitting on is overpriced garbage. There's a lot of bad stuff just rotting on our MLS system. But we are in the worst part of this mortgage renewal wave post COVID that everyone's been worried about. There's
Right.
1.8 million mortgages from last September till this September that are going to renew, and the peak of renewals is June this year. So if you look at the charts, like it's scary how many homes are going to come up for renewal. 60% of these renewals are going to be facing an increase in costs because they signed up for fixed rates back when money was free during COVID. So we are going to have a lot of inventory from this, I think, come to market. And it'll be interesting to see, because I think a lot of the stuff that's on the market is just going to continue to kind of rot in the background. And the smart buyers are going to be watching for well-priced, updated homes that come to market from the stuff that would have naturally come to market this spring, plus some of the ones from this renewal wave. It'll be interesting to see how that balances.
Yes, when it comes up. True. That is true. Although I heard, talking to a mortgage broker last year, I heard that a lot were coming up. There was sticker shock happening in terms of mortgages for sure. But then with the change from 25 to 35-year amortization, that kind of took some of the pressure off. And I feel like banks are aware. They don't want everybody to go into debt. Plus, our what do you call it? Interest rate, not our interest rate, our
Oh, you're talking about like the
cost
stress
of living.
test? Oh,
No, inflation rate. Our inflation rate has been okay. It's been really groceries that have affected our inflation rate. So if we can get a grip on our inflation rate, then we can perhaps get a grip on our lending rates and everything like that. It also depends on what
I,
happens in the US, actually, in the
I
midterms.
agree, but one thing I have to say about inflation is, like, if you look at this, you imagine the buyer from 2021, 22, they got in with a good year, a good rate on a 4 or 5 year mortgage. So say that they're coming up in June, okay? Inflation already inflated. So
Right.
you know what I mean? So like they've been going through the past 2 or 3 years, and I think a lot of people's savings have been chipped away at. So I know that banks are doing things to make it more comfortable for people. The average increase in cost isn't as much as I thought. For a lot of the people who renewed last year, it was like a 10% increase in their mortgage cost every month. This year, they're saying it's probably closer to 6%, which is not as bad as I thought. But I also think that there's just a lot of households that have been put under a lot of financial stress. So my worry is that this will be like the straw that broke the camel's back.
So what's your prediction? Because I'm hearing higher inventory and more people getting stressed out by their mortgage.
My prediction hasn't changed from what I have been saying over the past couple of months. I think we're in for an active market. I think we'll have a lot of catch up transactions, like people who wanted to move over the past year or so haven't gotten to it. And I think we will see some modest gains in price. I think, like, over the course of the year, probably another 5 or 6% on average price, and probably more like 3 to 4% on the HPI. That's
Hmm.
what I still think that's going to happen. And I think the real activity is going to be around good quality new listings, particularly in the detached segment. And I think we're going to have just a ton of inventory that's just kind of along for the ride on the market. You might get some deals there too if you watch for the right thing and just you got a real strong stance in negotiation. I always tell my buyers, like, watch the brand new stuff and watch stuff that's like a month to 2 months on market, because sometimes you can go in and get a great deal.
It's true. It depends on the time of year. Okay, so my prediction, I'm just looking here. We have been fairly steady over the past 2 years, come down like since a peak of 2022. I'm projecting we're going to be steady as she goes. And I think that we just have to be really informative with sellers about what to list at. Be the best deal out there right now. And
Mhm.
I'm not saying buy $100,000. I'm just saying like 25, 20, and price accordingly so that you can generate multiple offers, because there are eager buyers looking for quality product out there that are going to write if it looks like it is valued, if it's a good value. So
I'll
that's
just say too, when it comes to average price, if we look at a market that goes up somewhere between 4 and 6%, I know a lot of people are like, we can't take it. Like, house prices just need to chill out. We need our market to just get back to being a little ahead of inflation. Otherwise, it's a really scary bet for people to take, and we need our housing market to stay alive. So I do hope that'll happen, but that doesn't mean you should overprice your house right now. It is very price sensitive. We are sitting on a ton of inventory. If you say, oh, well, this year it's going to go up maybe 4%, so I'm going to price it 3 or 4% above value because I don't want to miss out, you are going to miss out because no one's going to look at your listing. So be careful. I couldn't agree more with what you just said.
okay.
Yeah.
All right, so we're looking forward to a good year. I know that we're building up on listings, and I definitely have active buyers. How are your buyers looking?
Good. We had two people go under contract this week. Both of them got good deals on great properties. Um, One interesting thing that we found is, like, shopping for detached in the core just over the $1 million mark. Um, there's a lot of variety in the quality level of the properties that you're looking at. You'll see a lot of stuff that needs a lot of work. We put a great property under contract by actually spending a little bit more, and we spent about 50 grand more than another one that we'd offered on earlier this month, but it had a newer roof, newer furnace. The waterproofing was all done. It had a basement apartment. So sometimes things look like a good deal on paper, but the amount of work that they need to bring them up to a living standard is really far. So that's something that I'd be really careful with in the market this year. Um, it's not all about the asking price.
It's true. And it goes to show like you can look at things virtually, but you really have to get in and smell it,
Yeah.
see it, feel it, look at it, and just like really perceive the house
Yeah, and
as a
add up the
whole.
big ticket items like the roof, the heating system, the drainage system, the plumbing system. Like, those can be oh, and the windows was the other one with this example. But you look at those five things, that can easily be 150 grand. The property that we spent 50 grand more on, we saved about $75,000 the way that I'm looking at it, because just to get them apples and apples from the one that we were looking at earlier this month, which we were also in competition on, would have cost us way more. So be smart about what's in the house you're buying, not just the asking price.
Yeah, exactly. All right. Well, thanks, Sean. Always informative. Love
You
the
too,
research
Jane.
that you're doing.
Okay, everybody. Thanks for joining us.
Yeah, if you want more information, connect with us. Sean, what's your number?
It's 250-589-4166. You can text or call.
My number is 250 744 0775. Text really works when I'm in the car. And give me a call too. I love to answer the phone. All right, take
Okay.
care, everybody. Bye.
See you next month.